back to MyStockScanner Live. The markets are moving fast, but our framework always remains the same. We are looking for quality stocks with an upside, and we need the timing to be right. The 3-point playbook portfolio sets at 5.3. Hans-Henrik Nielsen, we're not too heavy on the tech side, so we went down a fraction. Is that how it is?
Oh yeah, that is definitely how it is. We have rotated out of a lot of tech. Market have been a bit risk off. So last couple of days we have underperformed a bit.
But Liam, yesterday, a company that didn't underperform for sure, NVIDIA. On a scale from 1 to 10, and we're going to dive into the numbers and talk more about them later, but on a scale from 1 to 10, where are you going to put NVIDIA after yesterday?
Well, I would put them at 10. Every other investor seems to be saying, well, 3, 4, you need to try a bit harder.
Yeah. Exactly. We're going to talk lots of NVIDIA on here because once again, they're in focus after an upbeat forecast. But as Liam said, the investors were reacting a bit cautiously. The stock went up in aftermarket up to 4%, and then it came back down again. But in Asia, Samsung and SK Hynix, they were rallying to record highs on the back of NVIDIA's number. In Denmark, we're going to talk Almindelig brand because they came with a full year result for 2025. We also take a look at Royal UNIBREW, who's expected with numbers. We're going to talk TORM, and then a Swedish-Danish connection called Better Collective on the betting side is also in focus. And since Liam is here, we're going to talk Guinness because it's just what we do. No, it's because the company Diageo behind Guinness went down 12.7% yesterday. The Swedish said, hold my beer, we can do better than that. And NIBE Industries went down by 13.13. And then we're going to talk Thursday tech with Liam because that's what we do on Thursdays. And we're going to look into Salesforce. The number of the day, 87%, and that has nothing to do with alcohol. Or does it? We will tell you later in the show. First, NVIDIA, the biggest animal in the jungle, and they came with numbers. Liam, stellar numbers. And as you said, champagne corks were being popped and then put back in the bottle because it went up, it came down again.
Now that would be a good trick. If they could do that, I reckon that would really put their earnings up. But yeah, it was a weird one yesterday. NVIDIA, they came out with great numbers. They were well above what analysts expected. Their margins were 75%, so 75.3, I think, which has stayed where they are. So they're not being pressured on price or anything like that. But the market sort of said, yeah, I'm not really bothered too much about that, and pretty much stayed where it was. It went up about 4% and back down again 4%. I think we're up 1% in pre-market at the moment. It was what I expected, really. The stock sort of, the company has massively increased its revenues, it's increased its earnings, it's kept its profitability, it's got huge prospects. Its clients are saying we're going to spend $750 billion, or the key clients are spending sort of $750 billion on data centers this year, a lion's share of which is going to go to NVIDIA. And the market is sort of, the earnings per share is going up. So from the value chart perspective, what we're seeing is the actual PE values are being compressed here as if they're under a bit of pressure, which I don't see. And at some stage that will either give and the stock market will shoot up, or investors will carry on thinking, actually, there are better places to put money. It's not going to double or triple this year, so we're really not interested.
But as when you showed the valuation charts before, you see a lot of sideways movements. But as Hans-Henrik also pointed out in our Danish show at 12, the thing is that now the numbers are basically catching up. The 200 days moving average is sort of catching up to where we're at right now. Isn't that a good sign?
It is a good sign. And actually, we've got a valuation sort of option on here, which paints in the valuation lines from the valuation chart. And if we just go back a bit and reset everything, you can see that if we take even back to here and draw a line up from the base, pretty much up to where we're going, we're pretty much on trend. We haven't actually moved that much from the trend. So, I think NVIDIA will still carry on grinding up. And I think part of the problem that you've got here is the investors are looking at it thinking it's the biggest company in the world. How much, can it really increase by 50% or even 90% in the next year? And it is a tough one to sort of quantify in your head. But actually, if you're willing to pay 30 times your earnings, and the earnings go up 7.8, and that's the worst case scenario we got. That's when it was down here in April, when last year, when Trump's tariffs were hitting the fan. Then you're still seeing a 21% increase. So what's not to like about it?
And that's how they reacted in Asia when the markets opened out there earlier today. And you saw SK Hynix and Samsung go up, both competitors, but also working with NVIDIA. In that sense, isn't that a good sign also from the overall market and the market, AI market in general, looking forward to the American market opening today?
I think it probably is, and it's good for the memory stock. So what the one thing that NVIDIA confirmed yesterday was that they see no end in sight to the ridiculous amounts of demand for their chips. Anyone who's serious about sort of running AI, either training or inference or anything like that, has to use NVIDIA chips, because you can't actually train properly without that. So and that going forward requires oodles and bags of memory, and SK Hynix, Samsung and Micron are the ones that are supplying this new HBM4 memory that we've talked about. And that is why you see this stellar increase from back in August last year all the way up for the memory companies, because they just can't produce enough of it. And I read a report today suggesting that could carry on for 2 to 3 years.
And again, explain to me, like I'm a 5-year-old, why are we not in SK Hynix?
Yeah, that's a sore subject that you keep on. You got a tick there. You see that? The SK Hynix Korean exchanges are just opening up to sort of the horrible foreigners out there. You had to have a proper investment license to actually invest in there until recently. The international brokers are slowly catching up, but my brokers, Interactive Brokers, isn't actually. I can't trade Korean stocks at the moment. They are on the German exchange, but the volume is incredibly low. That means yes, we'd be able to get in. But if we needed to get out because there's a crash or AI falls over or something like that, then we get severely hurt, and we don't do anything without the proper liquidity.
And if I may say, I hate to mention this, but Liam, you were actually calling it out in September last year. I noted down on my chart, which is just depressing to see what sort of gain we could have gotten.
Yeah.
So that was a good call.
Yeah.
Let's do 5 seconds in silence, and then
yeah,
it's up there, and then we can carry on with stocks lesser good. No, it's just what happens in that sense. Again, there's 70,000 stocks, I think, just on our platform. Plenty of stocks to take a look at, but SK Hynix could be the one that got away. We'll find something else, and we already did. Last year, 34.48 was sort of the tune that we played. And talking about that, we have a seminar or webinar next week on Tuesday in English at 7:00 at night, where we take you under the hood. We're going to show you our tools. We're going to explain how we did that last year and why we're up 5.3 so far this year. Tuesday English, Wednesday it's going to be in Danish. And since we're talking Danish, and we will get back to the tech side of things, but now we need to activate Hans-Henrik Nielsen so that he doesn't sort of fade away. His voice is leaving as it is, but we need to take advantage of him while we still have him. And we're going to talk on Mini Brand, the insurance company, came up with the full year numbers for 2025. Hans-Henrik, take us to the numbers and tell us, is it a good company?
Yeah, well, first of all, the numbers were they were just as expected. There's not too much in that. And Mini Brand is an insurance company. If some of you out there don't know them, we did a face-off with them and Tryg, another Danish or Scandinavian insurance company. Tryg was a winner last time, and if we look at it, quality score, you shouldn't really regard that, because in the banking insurance, it's a bit off with the quality score. But earnings per share is going up. Revenue has been flatlining or going down, and that was one of the reasons why I disliked it a bit early on this year. PEG ratio is fairly good, and return on equity and invested capital is going up. Capital employed, again, with insurances is not really the best way to look at it. But overall, it's an okay company. It's not that. Last time, or when I did the face-off, it was actually up here. The first question is, of course, is it a quality company? And then the next question is it well priced? Is there good potential in it? And we didn't really think there was back here. We didn't know it were to drop 3 points here. But now that it has, it's actually beginning to reach something that could look acceptable. However, looking on a chart, we never buy something in a downtrend. And there's several ways of looking at that. Under 250-day moving average, the black and the green line here, is not a place we want to be. And also we have our own MTI indicator. When that is in double red, it's an absolutely no-go for us. So fundamentally, it could be closing in on being an interesting case. Technically not.
We're going to wait, and that is also how investment should be. It should be boring and waiting game sometimes. We don't have to wait to talk TORM, because that's one of the stocks that's a bit of a conundrum for us, because we really don't get it. And when I look at it today, Hans-Henrik, it's up by almost 6%. We still don't get it.
No.
Why is it up by 6%?
I have absolutely no idea.
Well,
the earnings were basically what we expected. The earnings per share have been going down, which is a stock we don't buy. Revenue has been going down. There's actually not much in here I like. And when we look at the value chart, it just become an even bigger mystery. Analysts are saying close to minus 18% over the next year or so. Our scenarios with falling earnings and the PE numbers that we can see historically, it's absolutely a no-go for us. Again, just because I don't get it, I'm not the smartest in the market. So just because I don't get it doesn't mean it can't go up another 100%. It's just, it doesn't fit into our strategy. We simply have no way of quantifying this stock.
And that's why we're not in it. That's why it's not in our playbook. We play by the rules that we set up, and we keep them always. We're getting closer to things that we really, I would say, like, in that sense. What's not to like about a brewery? We're going to talk a little bit about Royal UNIBREW, because they come with numbers later today, and they're in the portfolio. And then we're going to talk betting. We should believe there was an Irish show that we were doing with subjects like that. But if we swing by them one at a time, let's go Royal UNIBREW first. Tell us a little bit about that. We don't have the numbers yet, but
no, I might be a bit biased here because we have it in the portfolio. But the good thing about the 3-point playbook is it doesn't matter if you're biased or not, basically, because our colors are showing green here, quality of 90, earnings per share trending upwards, revenue trending upwards. The free cash flow is okay. Return on capital, the return they can squeeze out of what they have available, has been a bit dropping, but seems to be recouping a bit. It's a good, solid company. We would like that in our portfolio. That's why we have it. Where we bought it was down here, where we really like to buy quality companies, because we have this value channel here, which is where we take the estimated earnings multiplied by different price earnings that historically have shown to be cheaply priced and expensively priced, and we bought this at a cheap place. Right now it has skyrocketed upwards, and we will keep in it as long as the trend keeps going upwards. So right now the trend is nice and we are making money.
And the thing is that some of the bigger breweries around the world had a not so stellar day yesterday, and we're going to come to an Irish one that really had a bad one. They don't only just do beer, but Diageo went down by more than 12% yesterday. Liam will get his swing at the bat at that one, but not until we pass by a Swedish-Danish betting stock called Better Collective. And Hans-Henrik, Better Collective is one of the stocks that the three of us has discussed a lot, because with the prediction market, I'm kind of going, are the normal old school betting companies really the way to go, or is there something
Yeah, well,
from the past.
this company, the owners here are really clever guys. They are supporting Viborg football team, so they are high IQ. That tells it all. But
For Viborg, is that high IQ?
no, let's have a look at it.
Yeah.
Yes, but you're absolutely right. There is a question about the betting market being under pressure from these should I say guessing companies like Polymarket, and where you can bet on anything. How long does Trump's handshake last, or his speech, or whatever? They are, at least it seems like they're a bit under pressure. But the Better Collective actually showed some good numbers. They're showing earnings per share going up, revenue fairly flat here. It's not the best of the best quality companies, but if we look at the value chart here, even though I have lowered the price earnings here to compensate a bit for people being nervous about competition in the betting market, it seems like it is really picking up on something interesting here. That is really well priced. We can see analysts are saying 52%. We have somewhere between 51 and 146. Not to say it should go up 146, but it seems like the upside is massive compared to what risk we are taking. And just on the chart, what I would really like to see is a chart going something like this: above 200, down to 200, and then a bounce. If we imagine that the 200 kept staying here in the middle. So that is really something I would be looking for. I wouldn't be completely against buying it if it did something like that.
And you might get your wish in that sense that the Better Collective is up 3.5% today. So the first leg of the movement is maybe happening. We benched Liam for a little bit, not on purpose, not because he's not sporty or anything like that, and that's why he wasn't part of this, but that was because it was Danish and Swedish. But now we come to his forte. We're going to talk Thursday tech. And Liam, we're going to segue back into NVIDIA, because the thing is the expectation, but it's also a question about power here and power grid, because can they get the power needed to run the chips for all the data centers?
It's the big thing that we've talked about for the last 6 months or so. So this isn't a new phenomenon that's coming in. It also covered the State of the Union speech from Trump, which was a lovely thing to listen to on the other night. But he basically said that all AI companies, all data center companies, will have to build your own power, called BYOP, bring your own power to the party. So that effectively means that they're going to have to put either gas turbines or solar panels or nuclear power stations and revive old nuclear power stations to actually make this stuff work. And it's effectively because the US power grid is ancient and creaking already, and it's not going to be able to take the 120 gigawatts, new supply that they're going to need by 2030 to run AI. So that's what they're looking at. I identified a few companies actually in the piece that I did. So the Thursday Tech piece is up on the platform. Schneider Electric, our subscribers will know it already. They got a bit of a head start on this one, and we're up 7%, I think, something like that at the moment on Schneider. Which is part of the key infrastructure here in the build out of various parts, the different parts of the load out on the power grid, whether it's transformers and things like that. So you've got Schneider out there, which is great, and we see fairly low downside. The upside is less than it was when we went into the stock. It was about 20% there and about 40% in the bull case, but it's still not a bad stock, and it's still sort of vaguely undervalued there.
If I may add, Liam, it's up 5% today.
Oh, is it? Okay, brilliant. So even less of an upside to people. I'm not sure that's good or not, but it shows that we picked the right one for there. So we bought it pretty much at the bottom again there. So we saw that hit the bottom, hit where investors have actually started coming in and buying in the past, and then it's worked its way up. I've identified a couple of others. Cummins is actually quite expensive, and I wouldn't go into it now, but it has some upside in there, probably a little bit more than Schneider. They're involved in actually the backup generator side of things, and Hitachi. The big sort of problem for the US industry is actually building high voltage power stations and transformer systems. Hitachi are one of the few companies in the world that can do that. They're on the Japanese exchange, but they do have some decent upside there.
And it's something that we're going to keep an eye out, and you can look forward to getting more stocks from us in regards to that in the near future, because we have watch lists that we put these stocks into, and we will recommend them as we come forward. This is not buying advice. It's just the way that we see the world. But I need you, Liam, to look at another thing that, well, I won't say that it doesn't have the power. Question is if it has the legs. Salesforce has really taken a beating over the last couple of months, together with the software and usual. But Jensen Jung kind of gave them a, should we say, a shoe up yesterday, a leg up yesterday.
Yeah, Jensen said he's talking his own book, so he's basically saying no, because they're clients of his as well. They're saying no, this isn't going to kill those clients that pay me money to do these things. So that's one thing. He has got a vested interest in this. The second part of it is he was saying that agents are going to be using this software. They're not going to be replacing it, and that's probably pretty much right. You can see here that the prospects, analysts think the EPS is going to go up through the roof in the next 12 months or so. If we look at the company's a high quality stock. If we look at the valuation chart, actually, I mean, it could potentially go down to there, or it's up there. Who knows where this is going to go? Actually, it's very, very difficult to place. But one thing everyone does agree on is it's really cheap at the moment. I was thinking earlier on, it's not something we'd actually got around to, but the CEO of Salesforce is actually really in bed with Trump. He's had a lot of criticism for not criticizing the ICE movement out there and what's going on with shooting various different people when they seem to. And I wonder if that's got some of the, that's some of the reason why Salesforce are saying we're not sure we're going to get too many more clients in the next 12 months.
There's no doubt that political things do influence the way that people invest. Like today, it was almost certain that we're going to get a check, even though it sounds a little old school, for food here in Denmark. It's called the food check in abbreviation from Danish to English. And about 11% of the people said they're going to invest in stocks for it and not buy food. So that'll give a bump to the market. But Hans-Henrik, I'm going to take you to Sweden because we have a couple of things.
If I may add, just very quickly to Salesforce, they also announced a $50 billion stock buyback, yes, which is about a third of their total market cap. They are going to buy back over the next, 3-4 years. That should be able to lift the stock as well.
And again, that is just some things that's in stock for the Salesforce stock. It can go to the roof, there's no doubt. But a stock that went the other way, we're going to go to Sweden, Hans-Henrik. NIBE Industry had a poor day yesterday, 13% down. But it's not a bad stock.
No, it's not. If we look at it here, it's absolutely true that it took a beating yesterday. However, it is actually it's up almost 6% by now. It is just hovering around the 200-day SMA here. If you look at it, it's an industrial. It's one of these, you could say, boring companies with some heating, some environmental control and stuff. Quality score of 68, rising earnings per share, flat revenue, which means they're probably squeezing some better margins out of their revenue. We have a return on capital employed that has dropped somewhat. Free cash flow, really good. And when we're looking at the stock overall, they can pay their interest rates 4 times over with the earnings. We would like it a bit higher, but it's absolutely a decent company. And when we look at where they are today, if we just jump in here, they have been extremely, you could say, overpriced at a PE of almost 100. And this is a good example of what happens to stocks that are priced for perfection. Not many stocks, I haven't seen many that could last years and years with a PE at 100. Even NVIDIA is what, 50, something like that.
I think Tesla will be the first one.
Oh, Tesla and Palantir. So they are there, absolutely. But it's just that right now they are back in a PE of 30. That is still a bit lot for an industrial, but they actually showing some really good potentials here between 17 and 75. So again, we are looking at a bit with as with Better Collective. I'm not really happy to see them under 200. So let them start a bit of a trend. I will gladly give away some of the upside potential if we could get a bit of a trend going. So absolutely a decent company.
We have another company that I know that Liam's going to say they're decent. No, I don't know that for sure. But they went down by 12.7% yesterday while Liam was singing "Oh Danny Boy" because it's Diageo. It's the company behind Guinness. We talked about them, I think, 3 months ago. Well, we basically had the same story. What's going on, Liam? They keep going down.
They do keep on going down. Yesterday was more about, they reported earnings yesterday, dropped down, 12%, something like that, 13%. They basically said their US business is potentially shrinking for the next year or so, so the prospects are going down. And they've had a new CEO in called, his nickname in Britain, allegedly, according to TradingView, is Drastic Dave. To be honest, if you were running a Diageo company, you'd turn it to Drunk Dave, wouldn't you? Or something like that. That would be much, much better. But yesterday he was quite drastic. He cut the dividend by 50%, and investors, they don't like the fact you're not going to make as much money next year, and they don't like the fact they're not going to give you as much. They're not going to give as much money back to investors. So that was the real cause for 13% down. Looking at them, I mean, I'm doing my bit. I've got sort of Guinness T-shirt on. I've got my normal Guinness can next to the desk. So I'm keeping everything going for them. But the real problem is they're quite overpriced in the US, and the US market is softening. So I think their average tequila bottle is $45, which is much, much higher than everyone else. And that's what's really killing them out in the States.
Yeah, because they don't just do Guinness, they do a lot of other things.
Yeah.
And
Guinness is doing really well, though.
Yeah.
So, and they haven't thanked me.
And I can see Henrik is doing Hans-Henrik is doing his bit by wearing a green shirt as well. It's really it's all ganging up on me. But I'll tell you why they dropped. And it's interesting you said that they dropped 13%. And we're talking percentages because here we go. Number of the day. Gen Z drinks 87%, and we take your 13% from yesterday. We had 100, but they drink 87% less alcohol than prior generations. If you want to do that into real money, that's $830 billion over the past 4 years that these youngsters forget to spend on alcohol, and the rest of us can then forget why we spent that kind of money on alcohol. Isn't that the way it is? But it is interesting for alcohol producers that they're looking into this.
But we've got 5 kids at home. Well, not home anymore, thank God. But they don't drink. So
what's wrong with people? No, I can't say that. That's
we haven't got time for this. What's wrong with my kids? So,
But listen, if you have the time, then please join us on Tuesday, 7:00. In the evening, we're going to do a webinar where we show you the tools. We'll explain how we last year avoided Novo that fell more than almost 48% last year. And instead, our portfolio was up by 34.5% last year. We're going to tell you on Tuesday at 7:00 how it's done. And on Wednesday, we're going to do it in Danish. Guys, we're coming up at the end of the week, which means that we have Friday broadcast left. One thing we do on Friday is have the face-off. And Liam, we're going to pit a UK company against a Danish company, Convatec against Coloplast. You want to put your bet down? You want to call Better Collective and put down a bet, or what?
I mean, one of them's a decent company, and one of them's Danish. So, what more do you need to say?
I don't know. Can we mute him, Hans-Henrik? Can we really mute him? Okay. Always a pleasure having Liam Flavelle with us. Remember, his Thursday Tech is available on our social media and on our platform. Read more about it. It's really interesting, and it's deep analysis of things that are moving the stock market. Remember, he's back on Tuesday on the show here at 1:00. Hans-Henrik and I are back tomorrow at noon. That is today's market decoded, today's stocks tested. Now it's your move. Be guided by quality, upside, and timing. We're back on our air tomorrow. Happy investing out there. Take care, guys.